how should one read into the commentary from the US Fed, especially the choice of the words where they're clearly indicating that things are looking up for the US economy? And sir, you know it better than anyone else that Fed has got their view on inflation and the US economy wrong. So this time when they are commenting on the US economy, I'm sure they are more than certain.
Well, I'm sure they're never certain, but things are looking good. Economic growth, real GDP growth, say, is a broadest measure, has been doing better than almost anybody would have thought a year and a half or 2 years ago that we'd be doing at this late stage in the recovery. And inflation is tracking down. The core inflation is not quite where the Fed wants it to be, but headline inflation, overall inflation, which includes food and energy, is almost exactly where the Fed wants it to be. So, you know, if they were a more celebratory group, people on the Fed are very sober-minded and serious. But if they were more celebratory, they'd be celebrating the soft landing right now.
James, are you a bit surprised that we've not seen any kind of a reaction in the bond market or a significant reaction in the bond market even though Fed has cut rates? I mean, bond yields are going higher even though when Fed is cutting rate. Economic history tells me that it should be the other way around. When central banks are cutting rates, rates should be going lower, James.
Well, I think we have to consider the backdrop that we've got going on right now. It's markets are trying to digest what a Trump presidency may mean. We've seen some huge moves over the recent weeks as well. I mean, we've seen an 80 basis point rise in the US 10-year yield. So that's a huge move in a relative short pace of time, during which the Fed has cut rates 75 basis points. So I think the Trump trade, as it's so called, is certainly in play here. And that sense that we may get a slightly stronger economy in the near term. We've had a clean, clear election result. That may allow some companies that perhaps have been a little bit cautious looking at the election, worried about what it may mean. Well, that certainty is, we've got that clarity now, and that may start to see people putting money to work once again. Investment that's been put on hold, hiring that had been put on hold could well come through. So that may well be a factor in the market's mind. Also, of course, there is this concern about this so-called trade war as well. Will we get the tariffs coming through aggressively and rapidly? Will that have a damaging implication for inflation as well? So there's quite a lot of factors going on in the market. So we are seeing some quite, I guess, what you might term unusual moves, but we have to look in the context of the broader sense of things happening all at the same time.
If you like this video, then like, share and subscribe to ET Now.